Good morning, traders. We write Friday, the 31st of October, 2025. Welcome to another Flow Show. Before we start digging in whatever happened overnight and yesterday, just a reminder that you can still enjoy our 30% off all plans for the trader funding program, just using that code SPOOKY30. The discount runs until the 2nd of November, as you can see on the screen there, so no time to waste. Just if you want to give it a go, you only have like a couple of days left now. All right, moving on to what happened. I hope everybody is okay, doing okay. In the meantime, there's been a few moves over the past couple of sessions. Let's go over what has happened yesterday. And let's start again in Asia. And with the PBOC came out with a couple of comments overnight. By the way, they fixed 708.80, still below 709. Dollar China, in the meantime, is moving slightly higher after the meeting between Trump and Xi. But we had a few comments out from PBOC Pan overnight saying that PBOC does not want the FX to overshoot, and they are studying policy tools for handling the market volatility. Not that it has been that volatile, we think, in dollar China over the past weeks, but they also said that they are studying a possibility to narrow the short-term rate corridor. So whether he was kind of talking about effects. So I guess that they want to narrow that. I think it's a 2.5% band, so 1.25% on each side of the mid rate or so. Or is it 2.5% on each side? I don't recall. If anyone recalls exactly what that band is, please put it in the chat. That would be great. So they are studying cases to really keep the yuan inside a narrow corridor. Don't want to overshoot. Overshoot in this case, I guess that means that they don't want, sorry, the Chinese yuan to strengthen much more than it has over the past months. It's not really very useful to go to spend a lot of time over it, but just know that we moved back up from a low in the 708s on the dollar to CNH, which is the offshore yuan which we can trade. The local Chinese, they can trade the CNY, but we have to trade the CNH, as you all know, and moved back up to closer to 712, which is around the middle area of what we saw over the past weeks. Staying in Asia, APEC, there are still meetings ongoing. We heard from G and Carney just a minute ago. Carney said that the meeting between him and G would be a turnaround, a turning point in the Canada-Chinese relations. And we just had a couple of comments out, especially from the Chinese side, that they urge Canada to enhance the cooperation in trade and energy. So it's rather China putting a bit of pressure maybe on Canada. But Carney seemed to be a little bit more optimistic. We will know what's happening with those relationships, I guess, in more details come next week or so. If when we get maybe more details about what specifically they talked about. Sorry. Also on that APEC summit, we had a meeting between Takaichi and Xi. Not a lot out of there, just talking about upping the communication levels. Takaichi was saying that she wants a sound and trade relation with China, but from both sides between China and Japan, there was not a lot specifics about what they talked about. I don't think it was a very long meeting either, because we had some quick comments once we knew that they went into the meeting. What's interesting, though, from Japan is that Finance Minister Kata Katayama found the intervention playbook back in the finance minister drawer somewhere, and she came out overnight with some comments, actually skipping a few layers of intervention rhetoric and straight away going into watching the effects with strong sense of urgency, closely monitoring excessive or disorderly markets in FX, including those driven by speculative moves. So this is the first real warning shot that we heard from the new Japanese finance minister. Um, when we look at steps of verbal warnings, taking that disorderly, speculative wording up in the statement is really only we're actually only one step away in the verbal interventions where they say if they um, decisively noted speculative moves in the yen market. So as I said yesterday, we may due to the yen level, not so much due to the speed, because she did manage to calm down these yen moves with those interventions. We are roughly at the same levels where we left yesterday afternoon, our close. She did manage to slow everything down, but just know that we are not that far away from real threats of intervention. So I guess if we would get another, call it 150, 200 points in dollar yen coming out of the blue somewhere, and dollar yen or yen crosses, we should be on relatively high alert for the possibility of interventions, which should come under the form of first, if they already keep the same modus operandi that they did before, we should have a first round of checking the rates, and then afterwards, if the market hasn't heard that call, real interventions. Now, how they will operate, we don't know. One possibility is that seeing their very close communication channels between them and between her and Besant, they may actually wait for the U.S. session to perhaps intervene if they would already find it necessary to do so. But of course, they can intervene whenever they want. They can do it over the Japanese session as well. I would suspect, out of experience, that they would either go straight away in the Japanese session or wait for the whole market to be there, meaning that the Americans are there as well, and then maybe appeal on the Fed to give them a helping hand to sell dollar yen, for instance. So that may be a couple of possibilities that they would use to intervene in the markets. We're not there yet, I think. Okay, never rule it out. Of course, it would be something to close the month with a bit of an intervention on a Friday afternoon, but don't rule it out. But I think we are still a step away from the real intervention there. And then speaking about that cooperation or communication channel that she has with Besant, let's stay with Besant for a minute, because yesterday and overnight he was very active again in talking and giving his opinion. He did say, though, he started by saying yesterday afternoon that the shutdown is starting to eat into the U.S. economy. So I suspect that we will have a bit more talks over the weekend. The opinions are completely divided whether they could find a solution or not. But as we've already been talking on the shows, and especially on Face, if you listened to the last Face shows yesterday, and especially the day before, Dale was talking about that snap thing, that could start to bite really next week. So we may see some heightened discussions about the potential to end it, or they might actually going more head to head. And I would be a bit careful if there is a real um, still standoff, or shouting and screaming, and they don't find a solution next week. It may start to weigh perhaps a little bit on the equity markets, on the tip of my toes. And then he also spoke about what the Fed did. He applauded the 25 BP's Fed cut, but he did not like the language at all. He was really coming out quite harsh against the Fed, saying that the Fed is stuck in the past, that their inflation estimates have been terrible so far this year. They keep coming down. Inflation keeps coming down, and the Fed models are broken. He also said that he expects a big upturn in the jobs market next year. Let's see how that is going to pan out. I'm not sure that with all that AI, there's going to be a lot of jobs created on the back of it. Well, the balance between the creation of jobs related to AI and jobs lost due to AI seems, for the time being at least, in not going the right way for the number of jobs, at least as we see as we see from the last numbers and the companies reporting intentions to get rid of more jobs. And speaking about that jobs, Bowman was out yesterday, and she was talking about the bank supervision. And the bank supervision entity is planning to cut staff by as much as 30%, which is maybe in the absolute numbers, not a huge number, but it is still showing the tendency in the US, especially to continue to cut jobs. That is another how shall I say, another proof that the Trump administration is still trying to shed jobs, and Bowman had that to report last night. Okay, and then we move over to. Okay, before well, actually, no, I can straight away go into the S&P, because we had a 1.5 hour, if you look at the statement that came out where they kept everything on a standstill, and then half an hour later, another hour of Lagarde um, endlessly repeating that they are in a good place and that they don't want to change anything. That was very, very expected. Nobody expected anything from that meeting, and that's exactly what we had for an hour and a half. A lot of talks about nothing at all. Yeah, speaking about risks on the one side, the other side. Um, what I did I even note a line? Yeah, she said that of course they are not pre-committed to a path, meeting by meeting approach, and that the 2% CPI target is symmetrical, and that is as much as we can say about that ECB meeting, which absolutely didn't do anything at all in markets either. So moving on. Um, we had some comments out from one of the S&P board members, Petra. I hope I'm pronouncing this correctly. Petra Chudin. She said that the monetary policy is expansive right now and appropriate at present, but they would, if necessary, not hesitate to go into negative interest rates if needed, because they have experience tells them that they know that the negative interest rates work. So that is one thing that she said. And then the other thing it was that monetary policy is the main tool, but they stand ready to intervene if needed. The intervention is an additional tool. She also said that the communication with the US Treasury is flowing, and that the US Treasury understands the SNB's modus operandi in regards to the Swiss franc. It didn't do much for the Swiss franc at all. We're still in shying away from the well, moving away from the really big support in the euro Swiss. Swiss has weakened slightly, but we are not strolling too far away from that level either. Swiss franc is relatively stable right now. If you look at the Swiss crosses, that is dollar Swiss, of course, is moving together with the dollars. And then we had a couple of banks out in regards to the Bank of England, Barclays, one of the British banks, as you all know, and Nomura as well overnight. They are now looking for a 25 bps Bank of England cut next week. Therefore, Nomura expects Bailey, Breeden, and Ramsden to come to the cutting side of things. So those two banks, Barclays yesterday, Nomura overnight, they are now expecting the Bank of England to go for a cut next week, where most of the people in the market were not yet expecting that right now. But the possibility has opened up clearly for next week. I actually think personally that there is a fair possibility that they will go, that those three people will go to the cutting side. It will, by all means, I think it will be a very tight one. Okay, it's probably going to be, if they jump over the fence, it's probably going to be a 5-4 vote or something of the likes. Okay, anything more than a 5-4 vote for a cut would be seen as pretty dovish, right? So that's a bit of an early look at next week. Bank of England. And we also had RBNZ external member guy out overnight, and I will have a look at the Kiwi um, as well today because it's trading pretty miserably. And the guy didn't help at all, saying that the US tariffs acted as a negative demand shock for New Zealand, and that shock appears to have offset some of the easing that the RBNZ has been doing, which should be supportive for the economy, but that negative shock has destroyed most of their easing, and that is according to RBNZ's external board member Guy overnight. And I think I am relatively through at least those headlines. What else did we have yesterday? I already spoke about Bowman. Overnight, we had some Japanese data out, core CPI sticky. That's the Tokyo CPI, okay? Core CPI sticky. So that still plays in the hand of the Bank of Japan. On the other hand, surprise, surprise, we had a tick higher than expected unemployment rate, but the jobs to applications ratio, as I told you yesterday, remained on the very tight side. So this may be something rounding or so, that the roundup came out at 2.6 instead of 2.5. It's actually remained stable compared to last month. Industrial production in September, a bit better than expected, which is pretty decent news there. The problem is still here is retail sales were not as good as they expected and did not compensate for the prior month fall, at least not completely. Large scale sales, that is a year-on-year number for September, remaining unchanged. All right, so not too much to take about from those Japanese numbers for what the immediate moves in yen are concerned. Aussie PPI, bit hotter. Credit numbers unchanged. Aussie not really moving too much on it. Manufacturing in the manufacturing PMI, sorry, in China dropped a little bit from the 49.8, a bit deeper into contraction 49. It's probably weighed a little bit on the CNY, CNH overnight, but um, it has not really affected things too much. If we need to see several numbers of this remaining in contraction. And what is going to be interesting as well is going forward, because we know about this Trump G meeting, that they reopened the channels of trade, pushing back those tariffs and export controls for a year. So these numbers, they could see perhaps in the coming months a bit of an uptick if the Chinese, sorry, companies find it it's helping them. Um, and then what did we have here? Nationwide house price index in the UK a tad higher than the prior month, a bit higher also than expected. Not a lot is affecting the sterling right now. I will come back onto the sterling. French CPI tad lower than expected, but hasn't moved much either. If we look at the euro, Italian CPI lower than expected. That's quite a chunky lower number there. Not that it affected the European numbers that much because CPI year on year here, as we see the preliminary number tick down 0.1. I think yesterday Spain had a bit of a higher one as well, and then the German one was also a tick up, right? For the rest, very much unchanged. What's left on the docket for today? We do have Canadian GDP numbers out. This is, I guess, the final number for August, and then we have the preliminary number for September. It is useful today that I'm going to look at the Canadian dollar as well, because we are in front of a bit of an interesting level as well. And then over the weekend, they are going to close the APEC summit, and as I said, we may hear a bit more about that US shutdown, which is probably a bit of a risk event going into the weekend. But for the rest, the weekend should be apart from celebrating Halloween, should be a bit on the quiet side, perhaps. Famous last words. All right, what are you guys telling me? Ali, out of my Eurodollar shorts, okay? Out of my cable shorts because of month-end flow risks, yes. And then on the month-end flows, Mike, October is usually not a uh, big month for flows. That's for one. Secondly, the models have shown only very mild signals. Okay, that is one thing. We've also seen a little bit of a setback on equity markets, so that may have already diminished where the models were thinking about mild dollar selling going into the month end may also have reduced a little bit, but I still think that the differentials between especially if you look at the equity markets on the US and the rest of the world moves this month could play in favor of that month-end model still being correct and again could be more messy than directional, but could see some slight dollar selling into month end. Uh, Good. Okay, that is as far as I will go in my predictions, Mike, this month. Ali, what else do you have as a question? Last inflation report, yes, is down, going down now. Yes, I'm going to talk about the Aussie, and that is where we are right now. Okay, post ECB, not a lot happened on the euro. Again, those month-end flows, we could see if the models are right, maybe a little bit of an uptick, but I'm not sure that for the time being, those moves if they are really only fixing related, that those moves would be directional really in the broader term of the word, right? I'm not going to pronounce myself too much on as I said on those month-end flows, but it is possible that we see a bit of an uptick here. If we don't see anything, then we are going to see what happens over the weekend, really. Okay. If you look at how dollars are behaving in general, going into next week, if we don't see anything stupid on those shutdowns or whatever, it could be that we are going to see that test of the 115.40 again, maybe even 115. I'm not sure that either currency right now, whether it be euro or the dollar, has the strength to change materially trends. yes, the dollar is doing fine. Maybe it has to do a little bit with setbacks in the equity markets because of the correlation. But FOMC is FOMC, right? In the end of the at the end of the day, they did lower the rates, but they're still three quarters, 4% is still higher than the rest of the market. We have seen those yields ticking up a little bit, so that could just hold the dollar from falling. All right. So I'm rather thinking about uh, once those month-end flows are done, maybe it's slip, slowly down to levels where it's more pronounced and where the bearish side is more pronounced. I think is cable. If we get to see those month-end flows taking cable a bit higher, I really think sterling has an issue right now. We are turning around that 131.40 level, trading just a bit below right now. But this one looks weak. Okay, so if you see any, keep the clock in mind. Any moves higher because of month-end flows or whatever, I would not be surprised to see offers come back in the cable, depending where we are at 4 p.m. And if nothing happens, this really looks weak to me. It's been weakening. The market does not like sterling, and as I've already said so often, the sterling market can be getting a little bit emotional, as I call it. Um, and if really the expectations for the Bank of England are for a cut, even though they are still at relatively high levels, um, we could be in for another move lower here. I'm not saying it's going to happen today, but 130.40, 129.80, 129.40, it's all within the possibilities, I would say, for a move on the sterling. Okay. Um, and then yeah, the dollar cat. As I said at the start of the show, talking about Carney and whatever. Um, that Canadian GDP this afternoon, if we don't see a serious um, tick up, which Carney did not hint at over the course of his press conference, we could see a serious test here, and we are really close, 114, 140, 15, 25. And I think it may be important enough because as you see, it's moved back up above the 140 line here. It's also held on any retracement, all those little levels here around 139.70, 139.80. Um, it could just go for another walk higher. Again, keep the clock in mind. We could see a bit of a setback, but it does look to me that the dollar cat is looking big again. Okay, and even if you maybe is this an inverted? Could this be an inverted head and shoulder on the short term, and that line comes in right in that zone as well? It could be that we are before we know it, we are back at 140.80 here. It does look pretty big. And I want to come back at what I've been talking about with Dale as well over phase this week. If you look at currency pairs, if you look at dollar pairs now, let's talk about the dollar pairs. You always look at, and I'm talking about that when I'm doing my coaching sessions as well. I'm always looking at what is the best currency if you want to express your bullish or bearish feeling in a certain currency. And I think like if you look at the Canadian dollar, this is one that looks weaker. If you look at the sterling, that looks weaker. And if you look at and now you look at the commodity currencies, they look weaker than, for instance, what the euro dollar is really looking. Even if euro dollar is down, I think the other currencies like Aussie, Cable, Canada, Kiwi, they are looking a lot weaker versus a dollar than a euro maybe. So if I would be playing dollar longs, those other currencies are probably going to be favorites of mine instead of straight euro. Okay, Aussie, it has lost its elasticity, right? It's lost its mojo, and right after the G Trump meeting, I've spoken about these positive vibes in the Aussie, because of the potential that Australia needed to replace China for the rare earths. But then after the meeting, China is delaying controls on rare earths for a year towards the US. So what happened? The Aussie lost the mojo. Okay, and I think it's actually looking a bit fragile now. Sterling is already through that level, but really very close to it. Aussie is probably about to give it up. And again, I'm thinking a bit more like a cable move here. We're still above the level. We're still around 65.40. Yeah? But I'm thinking a little bit about this cable move on month end. If we would see an uptick in the Aussie, keep an eye on that. Keep an eye on that clock, because I think an uptick in the Aussie, if it would come around the London fixing, could be countered. Just my thought on this one. And the Kiwi is looking even more miserable, and that RBNZ member guy hasn't helped at all. All this hard work to come back to 58, the figure, has been undone in virtually one session, and we are back on very short-term support here around 57.15, that is, and then we are closing in on that downtrend line. Okay, it's been traversed a number of times. Maybe I shouldn't keep this, but it's still around the prior lows coming in there as well. 56.95, 56.85. It's looking a bit dangerous if the dollar doesn't turn around next week. Especially thinking about next week, if the dollar doesn't turn around for the weaker, this is also one of those that is looking fragile to me. Okay, so those are the ones that I'm kind of looking at if I would want to play the dollar on the stronger side of things. Okay, if I would play the dollar on the weak side. And I mean, if the dollar is going to give it up or return lower, I really think euro may be one of those currencies that has the best chance to rally, together with this one, gold. Surprising, right? Well, to me at least, dollar has strengthened. We're coming out of that Trump G meeting. Deals have been struck. The tension for now always be speak at the temporary sense between the US and China, but the relationship has, let's say, improved a little bit. Yet gold found bids all the time. We found bids on Thursday, especially one, two, three attempts to come down, and we've also always found bids. So this is one that is still in the market's mind of wanting to keep a hedge against stuff, for one, and potentially also looking maybe if the stock markets would turn around due to continued shutdown worries, and if that would then weigh in turn again on the yields and perhaps a bit the dollar. This is one of those that could do much better than other instruments versus dollar, if those things would happen, just because of the latest couple of sessions price action. Okay, we had this dip on the meeting, Trump G, and then quickly we are trading higher again. So this is one that I wouldn't rule out going to try at least moving higher. For it to really, we're still within that bigger zone. Yeah, 41, 10, 30, 38 and a half, 39. Those are your extreme levels. If it breaks out of there, then we are going to see new moves. In the meantime, we're trying to build on a very short-term wedge here. The support comes in at around 39.40 again, which is already a level in itself. The support is around there. So if you see a move down there, keep a close eye on what's happening. For the time being, we're turning around this zone here. A bit neutral, in the middle of that range as well, a bit neutral, but noteworthy that it could not stay low. That is just my impression. This one has difficulties to stay low. Maybe next week is a different issue. Maybe if they find a solution for the shutdown, this is going to move lower, obviously. In the meantime, as I'm saying, this is one that is keeping relatively well bid. Silver as well. We had a couple of tries here below below that 47.5, which were bought into relatively quickly. We are still inside the bigger range, bigger traffic zone. Yeah, a bit similar to gold. This one is 48, 49 three quarters, 50 and a quarter. If it breaks back above there, it's going to go higher. We need to break below 45, 40, 90 to break lower. In the meantime, in the middle of that range, a little bit similar to gold, we are seeing bits creeping in on dips. Okay, so that is one 47 and a half. I think is going to be inside the range, is still going to be your hinge around which this silver is going to trade. And I think I am and I think I'm about done for today, unless you guys have something different to look at. Euro sterling hasn't changed. It's still bit it's still bit, and we are back towards that 78.6 of that bigger move that I already showed number of times, also 1618 of this move extension. Now with the expectation shifting, even if it's a hawkish cut, Fred, I mean the fact that they move over the edge to cut the Bank of England, I would still think that the sterling will remain under some form of pressure, just because the market doesn't have too much confidence that Reeves is going to do much good to the UK for the in her budget the next week. Hannah Oil, I'm neutral, but relatively disappointed in. Whoops, no, that's not the same. I'm relatively disappointed in what's happening, just because we can't keep those rallies. Okay, 61, 80, 62 the figure. You see those lows here, that's just short-term stuff, right? They actually it's more medium-term stuff. All those rallies, it's disappointing, right? It really will have to break 62 and hold to keep going again. Until then, neutral to bearish. That's what I would think about gold. Long term, still very bearish to me. Long term, still very bearish, unless we start to break above 65s and etc. Still very bearish. This started all the way back from 2022 when Russia invaded Ukraine. All the serious highs have been sold into. Look at that, high, lower high, lower high, lower high, and we just continued the whole series. That is not a medium to long-term bullish picture for me yet. And that's it. We'll talk about the dollar mix in the room, Dimi, and also Blake has been talking a lot about the dollar mix in the room, Dimi. Let's have a look at it in the room. Let's close it for this month. Thank you very much, everybody, to have been with us every day of the month. And we talk to each other in November. Don't do anything. Be careful of the zombies, etc. Tonight, right? Halloween. They are after you. Okay. See you next month, guys. Thanks.